Hello, UAE Grow Your Finances community!
Where we discuss how to make your money work for you as opposed to the other way around, and how best to grow your finances within the UAE. Here, we like to flip challenges around and create ideas, opportunities, and possibilities so that we can all succeed together, because there are enough seats for everyone at this table. Russ, how are you today?
I am amazing.
That's a great answer. I love to hear it. And why is that?
I just feel good. I feel like, today is going to be a fantastic episode. I also feel like we haven't recorded in some time, so it's fantastic to be back for you guys. And we really have something juicy today.
As per usual, but today I feel a bit of an emotional inclination towards this episode because, I don't know, just as I was editing, I felt like it was something quite special, something that I didn't know existed, actually. I have to be honest, I always say I'm not very financially savvy, but I'm learning as I go. And I was delighted to hear all about what Ancova Capital Management have to share with us today. But first, let's get into the discussion topic for today. I've been brainstorming about this discussion topic, and usually what I do is I consume as much media as possible and listen to other conversations out there and draw inspiration from my own life. And I've been really trying to think of something juicy for you guys today. But today I woke up in a mood, and this has been the vibe of the day. And I'm just going to go with it. I'm going to go with my intuition for this discussion topic. And the mood has been doing those things that you would do if you knew that you had just a few weeks to live.
Wow, that is deep. That is deep. And it's actually a fantastic topic because I myself feel like I am never going to die.
You do?
I don't know. I just never have that doom feeling that one day I'm not going to be on this planet. So it's actually a fantastic topic for me because then it makes me start to think what I need to do before I die.
We could not be more opposite. I have this sense of life is so short, and at any moment you could be taken from this earth, or somebody you love could be taken from this earth. But I think it's based on our past experiences. Like, you've never lost someone in your immediate family, like mother, father, sibling, or even a best friend. You've never lost someone in that way. And I think that when those things happen to you, or happen for you, let's say, maybe we'll get into that in this discussion topic. Let's see where it takes us. But when those things happen for you, it's a huge eye-opener, it's a huge wake-up call, and all of a sudden, without even, you feel like you don't even have control over it, your priorities kind of shift. For me anyway, I'm speaking from personal experience. I can't speak for everyone, of course. So having said that, if you were given just a few, let's say you were given 2 years to live, or let's say 5 years even, 2 to 5 years, what would you do?
Travel, and more travel.
I didn't expect that answer because that's not very goal-orientated, and usually you're a very goal-driven person.
But if you have 2 years to live, there's no more goals. Your goal is to have as much fun, see as many things as possible in that short space of time.
What about legacy and what you leave behind for your child or children?
See, what I leave behind for my children will be plain and simple. They need to know their dad lived a life of happiness. He lived a life of joy. He lived a life full of surprises. He saw everything he wanted to see so that they can live that exact life. You don't want them to be thinking, okay, their dad knew that they had 2 years to live and he lived in a stingy mindset, putting away money for their future. Because at the end of the day, that is very selfless. It's great for your children, but do your children really want to witness that? Or do they want to witness their father, the happiest person he can be for the next 2 years of his life?
That's beautiful, actually. I think a lot of people will say maybe the children will feel dad just lived it up and blew everything he had and left nothing for us. But, as somebody who has lost a parent, I fully, wholeheartedly agree what you're saying is very real. And you would want to see your parent happy and just grabbing life for everything it has and living in joy and abundance. And that would leave peace in the heart for your children. So I genuinely thought you would go into a financial, into the financial aspect of it, but you took another path and I'm pleasantly surprised.
But I definitely would be putting something aside. I'm not going to lie. I'm not going to spend every cent I have. I would be putting stuff into investments that my children would be able to use in the future. But I would not be putting it in investments that as soon as I pass, my children should just blow it all, you know. There will be some sort of lessons behind what I leave in terms of monetary value. I also would love to eat at the finest restaurants. I've always been a foodie. I know we all are. We all eat food. However, I'm in food and beverage as an industry, as it's been a passion my whole life. And I would really like to dine at a lot of fancy restaurants around the world where I can taste incredible cuisines and taste food from the best chefs in the world. I think that's something that I would really love to do.
And what about leaving a legacy in terms of business and everything that you've built here and all the knowledge you've gained? How would you leave that behind for people to kind of draw from and build on?
I think we are doing that as we speak. You know, we created a podcast off the back of an incredible group. I'm not saying that to blow smoke up our chimneys. I'm saying that to the point of we didn't grow the group as a sense of ourselves. We grew the group with the incredible members we have on that group. You know, I learn things every single day from that group and it keeps on teaching, you know, and I think this is the legacy we leave it behind.
Yeah.
And I think we create in this foundation and hopefully we can pass this foundation on to our children to keep on growing everyone else's finances around them, because
that would be cool.
It's a passion. It's something that drives us. We want to help people. We don't want people to be financially scammed anymore. We want people to be financially confident. And we want people to just stop thinking like that mindset of we have to stay in the box. Otherwise, we will lose all our money. No, get out the box. Have a little fun. You know, find investments that bring you joy, happiness. That's what we do on a daily basis.
Okay, so let me ask you this. If you were a CEO of a massive company right now and a multi-billionaire, would your answer to this question be the same?
No.
Interesting.
I would resign immediately and I would make sure that I spend and I live it up for the next 2 years of my life. And I'll make sure that I take my family with me, you know, so that the children don't only have that legacy I leave behind, but also the legacy that we create in those 2 years. Because it's so, those moments will be moments that will be cherished for life.
I'm almost tempted to get a doctor to fake a diagnosis for you. And then after the period's up, be like, just jokes. This was just for living it up with you and having great experiences together.
Yeah, that could be something that would probably cause a lot of pain in my heart. So I don't think we should do that. But we do live a really beautiful life. So
we do.
So we must admit to that. Yes,
we're blessed.
We could be a little more extravagant with our cash, but we are putting it in the right direction because we do have many years to live, not just 2.
Yeah, and I like to keep it simple too. My answer would actually be different.
Oh, yes.
In terms of when I ponder on that question, I think I really overcomplicate it in my mind. And I overcomplicate the answer. I think about how I am going to summarize my experience on Earth and all the lessons that I've learned, the profound lessons that I've learned from suffering and pain and the good too. But I don't want that all to be for nothing. I don't want my experiences all to be for nothing and the lessons all to be for nothing. I want to help the human species evolve through my experience. And I always think, why do we not record enough? Why do we not put our lessons out there enough? The things that we've learned through lived experience, why don't we share that enough with one another so that we can evolve as a species? Because it's almost like our lived experience goes to waste, and then the next generation has to like just start from scratch again. So I always think about that. How am I expressing the things that I've learned rather than it just swirling around in my head? Because I have these internal dialogues and it like blows my mind, the things that I've been through and the things that I've learned. And I'm sure this is the same for everyone, is it not?
Absolutely. Yeah, for sure.
Yeah, and you almost play this movie out in your brain of, wow, this is what I've been through and this is what I've learned, and I'm so grateful that I've come this far, and it could have only happened this way to lead me here, and all of these musings and all the intricate details of lessons and information that is unspoken. And I always think about how I'm going to contribute in that way by speaking what usually remains silent within somebody's own head and musings. This is what I always think about, actually. Does that make sense?
It does. It does. I wish we had something that tracked our life, our biggest ups, our biggest downs, so that people can learn from each other.
But not even our biggest ups and downs. It's not even the biggest events in life.
The most profound.
It's even the tedious stuff. Even if you think about your entire career, each step of the way, each little step of the way, how you've changed, how you've evolved, the things you've learned, the way you've shifted, the way you've adapted, all of these small little intricate details that you know for yourself. You function in the world today in a certain way because of these lessons and adaptations that have taken place. But how much do you really ponder on that? Because I ponder on that a lot, and I never really express it, and I try to sometimes. And if you go on Instagram, you'll realize that the posts that you're liking, the quotes that you're liking, are usually quotes that you've already thought in your head about 1,000 times, and you can relate to it. That's why you're liking it.
So true. I didn't ever think of that, but it's so true.
Yeah, and it just took someone to put it in writing. And everyone's like, wow, and now it has like millions of likes. And it's like, but we've all thought that already.
Yeah, absolutely.
So I feel like that's how lessons are put out there. And then some of these quotes become so cliche because they are so shared and because so many people relate to them, and it's like a shared knowledge. But they weren't cliche to start with. It took somebody to come out with it. And now it's like common knowledge. It's like, oh yeah, everybody knows that, you know? So that's my answer to the question, which is a little bit more complex and complicated. But how does that relate to finance and business and legacy? Well, I don't think that my life experience specifically is in a sense of business and investing, but I think that people like Russ are more inclined to have that kind of experience. And he's also the type of personality that doesn't really express these things outwardly. And I think that those traits go hand in hand a lot of the time, where people who are so interested in finance and business, and this is not all the time, but a lot of the time, people who are so interested in these things are also people who, I don't know, maybe they don't have time to express these things or ponder on them or ruminate on them. But I think it's important, because I think that if you want to lead and you want to contribute to changing the game in terms of even business and finance in the world today, or even connecting the world or offering solutions to the world's problems, which is often what entrepreneurs are doing, it's imperative that you communicate these things so that firstly your team is on the same page and that they're able to kind of just follow your way of being and thinking within your company. But then secondly, so that we're able to level up in terms of the businesses within our country, in our world, and on a larger scale. So we draw inspiration from each other, which is what we're always doing.
Right.
But the more we share, the more we inspire, and the quicker we level up, and the more we evolve in all aspects, hopefully for solutions for our planet. Sorry if I went way too deep there. No, actually, sorry, not sorry, but because that's what I do. But it's just something to think about, I think, for all of us to think about.
That's very interesting. Now I want to hear of you simplifying this. What are 3 things that you would love to do in these 2 years?
Okay, the first one makes me a bit emotional to think about because this has been on my mind today. And that is to tell the people I love what I truly feel for them, no matter how complicated the relationship might be, or how much hurt or pain is there, or ego is involved. I would like to just put that all aside and connect on a human level and just tell that person what I really feel for them and spend time with the people that I love. So that's number one. Spend time with the people I love and like truly love.
Yeah, that's a big one, because at the end of the day, you know, you have 2 years to live. All that small stuff that started fights and drama and stuff like that are just not worth it if you really, really love the person. So that is a big one, 100%. And I can see that you are a little bit emotional about it.
That makes me emotional. Moving on. Number 2 would be to make sure that my children know everything that I would want them to know. So in terms of all the things that I've learned in life that I would want to pass on to them throughout their life through lived experiences and lessons, I would try to condense that and just like pass on like, okay, this is what I've learned as your mom. Maybe write them like a little diary every day. My last days, I would maybe write a little diary and let them know like the lessons or the beauties that I've seen in life and things that I would have wished to have passed on to them throughout the years. I would try to condense that and let them live with that. Not to condition them, but just to leave a piece of their mother with them. I guess it's an act of love. And the other thing that I would do, I want to say, is try to set up some sort of foundation that would help people. But over the years, I've learned that trying to put too much energy out there in order to help others is often really detrimental to yourself. So before, the way I would have done that is looked where there's like a lot of suffering and where it really gets me in the heart and the gut, and I would have led with that and just gone in and given everything that I have to help them. Maybe even money that I don't have would have just given to them to help them and say it's all worth it. But then I've realized through life experience that that is actually not the way to do things, because it kind of leaves you a little bit emptier, and that is not the purpose of helping people. You're not helping people to leave yourself suffering a little or empty a little. And some people might say, well, that's sacrificing. That's what sacrifice is. But I think that's a little bit different. So I think that what we're doing here on this podcast is a fulfilling way of helping, and that is something that I would want to continue, is to help in a creative and fulfilling and expressive way. And that's obviously just my way of doing things. Of course, there are people with amazingly regulated nervous systems with so much love to give, and they're able to outpour, and there's a role for them in this world, like your Mother Teresa's, your Princess Diana's, I don't know. But for me personally, I would like to help in a creative way and be sure that I'm leaving a legacy in that way, that I'm actually able to help on a bit of a larger scale than just myself, my immediate family, and the people that I know. I would like to contribute to the world in some sort of way. And I don't think that I'm anything special in terms of significant intelligence or mathematical abilities or anything like that. So I would do it just in my own little unique small way, and I think that everybody can. And maybe that's also a little lesson that can be left for others.
Wow, that's beautiful. But what about the selfish acts? What about something like traveling, eating at fine restaurants, going to see a show around the world that is the best theater production?
Oh yeah, I would love to immerse myself in anything theatrical, because that is what gives me life.
There we go.
Music gives me life, and theatrical productions and creative expression gives me life. So I would love to immerse myself in a world of creativity and surround myself with amazing creatives. Yes, that is one thing I would love to do.
Fantastic. So we don't leave something behind. We just go for it. We take the bull by the horns.
Yeah, I love that. You see how you balance me out? So speaking about leaving a legacy, if it's important to you to leave some wealth behind for yourself in your older years or for your family in the future, in the long term, in a safe way where you can really maximize to the best of your abilities in the safest way with a nice balance.
We have Eva and Ronnie, who will be talking about their incredible hedge fund, which has been featured in the renowned hedge fund journal as Titans of Tomorrow last year. This hedge fund has taken my brain by storm. I absolutely love it, and I myself am invested in it. So let's get on to this juicy episode, which will not be talking about some random fund that was created 20, 30, 40, 100 years ago. It will be talking about a hedge fund that is using AI and technology to really hit those returns in the right way.
Usually you would have lost me at hedge fund, but I'm telling you guys, this episode is worth the listen. Stick to it, stick with us, and we promise your mind will be blown and your possibilities will be opened. So let's get into it, shall we? Ross, are you ready to make finance fun?
Absolutely.
In 3, 2, 1,
Fun. Welcome, Eva and Ronnie. So great to have you today. So please explain to us what is Ancova Capital Management and who are you two?
Well, hi Ross, hi Kimberly. Thanks for having us here today. It's our first podcast to say that, first of all, we're not pros in the field.
Welcome.
So we're really honored to be on your podcast. We're big fans of your community. We're obviously passionate about what we do. So obviously we like to be surrounded with like-minded individuals. But yes, who are we? Ronnie, I'll give it a start. What you say? Okay. Yes, my name is Eva. I'm originally from Germany. I've been out here in Dubai since 7 years now. Started off in Dubai as a managing director for a single family office. They had offices in Mayfair and were setting up their office in the IFC. So I was appointed to hire the entire team, the team of analysts, and get started because they were going to venture very largely into the venture capital space back then. Yes, it was a great family to work with. It was a really exciting role, which I was in back then because it was a new space for me. Even though I have a economical and a finance background, I didn't work in that space before. I was like Ross, similarly to you and Ross, personally in the investment space. And just by luck, I found that role back then. Nevertheless, so again, family office, you can imagine your traditional investors, British, Indian family, heavily invested into real estate. And that's 40% of their portfolio was in UAE. The rest of the portfolio was across Europe. And we're talking also like commercial investments, so DHL warehouses in Belgium and things like that. And their income was derived from the hospitality industry because that's their forte and that's what they're renowned for in Europe, in the UK as well. And they hired me because they wanted to go deeply into venture capital investing because everyone knows, if you get your unicorn there, that's your 100x investment, 200x investment, depending on who you're investing with. If you have your next Uber, your next PayPal or whatsoever. So everything went good in the beginning and everything was fine. We had a really great analyst team on board with us from different sectors, TMT backgrounds, healthcare background, etc. But then the pandemic happened. Yes. Yeah. And when the pandemic happened, obviously a shift was needed, not only in their personal investment portfolio that you're looking for diversification, but also in terms of what kind of strategies you're investing your funds into and how are they regulated? Like how safe is your money from a custody point of view as well? So just imagine now, I just moved out to Dubai, set up this lovely office in the IFC. We're investing into XYZ, like you cannot even imagine. It was really, really crazy back then. And we had like great tech entrepreneurs who we were working with. But when the pandemic happened in 2020, what happened then is the whole portfolio almost got wiped out on the venture capital space. Because remember, in venture capital or private equity, if you're investing in like startups, 90% do not make it actually ultimately. So then imagine you have a small company and they have to go through a global crisis. That's actually impossible, right? Do the math there. Then at the same time, that family's first primary line of income, which is hospitality, was completely shut down, right? Because Europe was shut down. So your rental income is not coming like it's supposed to be. There was governmental rental cuts, which were on landlords' pockets. At the same time, in order to get cash, because you're not having that cash flow from your hospitality industry, restaurants are closed down, nobody's traveling anymore within Europe. Well, are you going to liquidate your real estate portfolio to 40% loss? Obviously not, right?
Yeah.
That's when the question came up, like, why are we not diversified in a more traditional way, right? Meaning traditional with a pinch of some modernness in there, like something avant-garde, where you have a portfolio which is structured with, some hard assets, you have your illiquid assets, your real estate and whatsoever, your PE investments, but you also need to allocate some funds into something which is liquid. Liquid meaning you can get your money out at any time. You are not constrained in terms of a lockup. And at the same time, the redemption fees will not be extremely high to do so. So what do you do in a family office space is you call your trusted banker. You have your private bankers coming in and they present to you which funds your client could allocate into. And then if you have your analyst team sitting there, you have them go through the fine print. And a lot of those funds, which you get sold by your elite bankers, they have a really high sell subscription charge, like 5% in some cases. At the same time, the bank wants to lock in your money. Either it's a closed-ended fund to get invested into, or they lock you in like artificially by saying, well, if you redeem your funds, 5% redemption fee, 3% redemption fee. So I was like, well, this is like completely crazy. And absolutely, there is a need for a fund which not only has nice returns, like a better return than a bond product, but at the same time provides safety when shit hits the fan.
Yeah.
Like when things go,
You can say it.
when shit hits the fan or when things go south. And at this and at the same time, where you can get out your funds anytime without being penalized, right? And that's where our origination story started from my end. We reached out to a lot of, let's say, product owners which are in the liquid space of investing. Liquid meaning SP 500. What is the most liquid market to invest into nowadays? SP 500. It's stocks, right? The big, large corporates, your Amazon, your Tesla, and so forth. And got introduced and by luck, because we were already devastated. We went through 99 product owners, literally, and they were the 99th one looked into. We looked through 99 strategies, quant strategies, because we do like the whole thing about AI, being able to do more precise investment decisions, not just some old guys just deciding I'm going to buy some stocks here and there.
Because you have to be ahead of the market, obviously. The AI is the new thing. Technology is taking over the world and you need to be with it. Otherwise, if you're going to be against it, you're probably going to fall behind.
Yeah.
So,
Absolutely. And investing is very different, especially in a liquid space, as you mentioned, Ross. Like decisions have to be made within seconds and they have to be well calculated decisions as well. So that's how I was introduced to Ronnie and his team. I would like to categorize them as the underdogs, but actually with emphasis on because they are brilliant. They're literally brilliant. So we went through these other products which are available on the market, like product owners. And what the first question for me is always, if I'm working with a client's money, like my family office I was looking after, would I put my own money into that? And even as good as this strategy sounded, and as good as these PhD degrees were shining bright into our faces, none of them actually had real experience in the market. These are really young kids, because remember, you just said AI is the new thing. It's been around a long time, but people who are finishing their degrees, they're quite young actually.
Yeah.
Right? They're like 30s. Did you ever manage $1 million? Well, no, but I have these simulations going on here. So that's when my comfort level stops. And if I don't want to invest in something and I am a risk taker, as I wouldn't be sitting here today. So how are you going to sell that to your client as well? So luckily met Ronnie, was introduced to a Cambridge professor to us. Ronnie and his team, absolute underdogs, Ross and Kim, like you will understand for yourself. I don't know if he's going to do the rocket science thing with you guys today. But yes,
I'll be simple.
He'll be simple. Okay.
Yeah, please, as simple as possible, because our listeners, I'm sure, would like to understand this
Now I'm
podcast.
super interested.
So yeah, and Ronnie and his team, not only do they have the PhDs and the degrees in that field, but all of them, they're four investment team quant members. All four of them have 25-year plus experience in the biggest institutions in the world. We're talking
Wow.
Goldman, we're talking Deutsche Bank, Credit Suisse, Barclays Capital. And alongside of that, they're just a nice bunch of people as well. So I like, okay,
That's
guys,
always good.
let's join forces and revolutionize what people are offered nowadays. Let's create a fair offering. Let's have a strategy which is also bulletproof and safe and well calculated from an investment point of view. And yeah, Ronnie back then, still now they're working on a couple of white papers, and they were like, well, we're actually heading towards a Nobel Prize in this field, hopefully like in 10 years time.
Inshallah.
And I'm like, maybe we could do something commercial. Like the commercial interest from their side was not really there because they left their high paid roles already, right? To get into this research thing. But for them, what was important was to be able to focus on their research, and me coming around saying, oh, this is really a great product for the market. It's like completely new for them. And it took a bit of convincing there to say like, no, we're actually going to be the good guys then. You can still go on your revolutionary path. And yeah, that's how we all came together.
Fantastic. By fate, it sounds like. Yeah.
It was definitely
meant to be.
And just to let you know, Ronnie is with us all the way from London.
Yes.
So that's why he's joined us through Zoom today. So over to you, Ronnie. Tell us a little more about yourself.
Oh, thank you so much for the introduction. It's really nice to meet you guys, Ross and Kimberly as well. And I really appreciate the introduction, Eva, as well. So my name is Ronnie Chowdhury. I am from the UK, as mentioned. My background is actually in mathematics and computer science. I started off by doing a Master of Research at UCL in computer science and AI. And that's the direction that I kind of went in. So it's a very, very different field from finance originally. But this being London, you naturally tend to gravitate towards finance because that is just what London is famous for.
Yeah.
And pretty much every job leads there, even if you don't like it.
Yeah.
And I didn't at the beginning. I really wasn't against finance. So it's ironic that I'm here speaking to you guys now in 2024 in this field. But I kicked off my software engineering career in London, and I worked for many companies, places like Accenture and PwC initially, but then obviously in the finance companies at Barclays Capital, Goldman Sachs, Credit Suisse, Citigroup, and so on. And I actually was in Dubai back in the 2000s. So I've actually lived here before when the place was a desert and Merge Al Arab was just starting. So I had a little bit to the place as well. But eventually in 2013, I was working at Deutsche Bank as a quant. So I was obviously utilizing my mathematics and my software skills. And they turned around and said, you've been delivering for us for quite a while. How would you like the opportunity to change careers and become a trader? And, at this point, I was married and, I was like, okay, well, that's quite a big change because, you're moving from a stable career that you earned your laurels in over 25 years, and now you're suddenly going to switch back as a junior person with no experience whatsoever. So it was a big risk. But my wife eventually agreed.
It's always the wife.
Yes. Although there were multiple conditions which we do not need to go into now. So I kicked off a career as a basic analyst trader with Deutsche Bank on the commodity derivatives desk. And I slowly worked my way up, learning the ropes, understanding the difference between a person who is in the mathematics side of things to actually doing it in real life. And there is a world of difference. A lot of people can talk about the theory behind what they do, but doing it in practice when you're actually managing $100 million, then $1 billion and subsequently $8 billion books is a completely different kettle of fish. It's psychology as well as the mathematics that you need to be able to control in your mind.
Interesting.
But yeah. And eventually by 2017, I've worked my way up the ranks and became the head trader at Deutsche Bank for commodity derivatives. So that was like a really big achievement for myself. And I was very, very chuffed at being able to get to that stage, especially starting as a new career and in only just 4 years. And I think at that point, it really clicked to me and where Eva and our paths crossed, because I was sitting there thinking, I have this great mathematics background and computer science background, along with 20 plus years of experience. Plus, I've got this 4 or 5 years of real trading experience at Deutsche Bank, where I'm a fully FCA regulated trader. Can I bring those ideas together in a more structured way? And that's where the seed of the idea for Ancova kind of started. And fortuitously, I ended up meeting Eva who had the same ideas in mind, the same plan. And as they say, the rest is history. And what you see before you now is the result of that collaboration.
Wow.
Unbelievable. What a story.
Cool.
I love stories, as many people that listen to our podcast know, especially when it comes to creating businesses. So it's really incredible, to say the least.
Yeah, inspiring for our listeners, actually.
Absolutely. So you can do anything if you put your mind to it, guys. So on to my first question, which is most probably the most important question of the day, is the S&P 500, where everyone is investing their hard-earned cash. How is your fund, your hedge fund, more profitable, more exciting, more of a trigger to invest in over this investment where everyone is looking towards?
Absolutely. I mean, that is a very, very good question, and perhaps one of the most important ones that we ask ourselves day in, day out. So I think most people, when they look at the S&P 500 or when they look at any kind of investment strategy, they think about it in terms of how much money am I going to make? That is not the focus of Ancova. The Ancova strategy focuses on something completely different, which is how much money could we possibly lose by taking on this investment? That is the focus of Ancova. So we are focused on risk management rather than absolute returns. So the way that works is that when markets go up, we would obviously love to ride the market. Everyone does. They hear S&P's gone up 10%, 20%, and they make the money, and that's great. But the problem is really on the other side when the markets go down. What happens when the markets go down is people panic and they lose money. Ancova's focus is on that aspect, because if you can only lose, say 10%, 20%, 30% of the market going down, but you can ride up the upside, you actually end up being much, much more positive overall. And that is the focus of Ancova. So let me give you an example. When the market goes up, say 10%, we should try to make, say, 70 or 80%. That's our target. But when the markets go down 10%, we should try to lose, say, 30%, so minus 3%. So net result is you're actually +7, where the rest of the people have gone down -10, and they come back +10, so they're at -1, whereas we are at +4 in that same period of time. And if you can do that repeatedly and consistently by focusing on that risk management rather than outsized returns, it's a completely different focus. And that's where the hedge in the hedge fund comes in, i.e. protect your capital at all costs. That's our focus, rather than make crazy returns. That comes naturally, just like as in a normal budget. If you don't go out and spend your money on the next big new purchase, like a big car, you'll have that money to buy a different car, a smaller car. So you'll actually have more money in your bank. Yeah. And that's really the attitude, making sure you save money all the way through so that you actually have the money on the upside.
Yeah, that's how Russ lives his life. And listening to you talking now, I realize that I really do not have a mathematical brain, because I would have never thought of this. So thank God for minds like you in this world, because you're saving a lot of people a lot of money.
Yes.
Just by thinking outside of the box, just by doing things a little bit differently and being a little bit innovative with it.
Absolutely. And we were just speaking about this before. We have so many people on our group that is so focused on, is it risky? Is it risky? I don't want to go into it because it's too risky. I'm going to go to, let's give an example, and a few of them might be upset with me saying this. I'm going to invest in an ETF, and they invest in an ETF and it's safe. Yes, they might lose 1% when the market is going down crazy, and then when the market is going up crazy, they might make 1 or 2% or 3% or 4% if they're lucky for the year. And then they think, I've had a good year. But is that really a good year? For me, that's not a good year. For me, that's not a good quarter. When I want to put my money to work, I want to make a good return. But also, I don't want to lose everything. Of course, no one wants to.
Just to chip
So
in
let
my
me-
2 cents there before Ronnie can dive deeper into it. What you're saying there is really, really important. And that's something I didn't understand before as well, before I met Ronnie. If you go on Preqin, which is like your Bloomberg for hedge funds, it's like your whole marketplace for let's say funds, where you can get information on which funds are out there. We're present there as well, which regulated and also renowned funds are out there. You can go on the category quant funds, and their quant funds, they will give you, I don't know, 20-30% a year in return. But if you look at their numbers during those moments of crisis, they are losing 30-40% of their portfolio. And that's where that comes in, like not focusing on the returns in essence. For us, returns are a side effect of good risk management, basically. And that's the way you actually should go about. And that's how you know, okay, this is a safe investment. But yeah, Ronnie will provide some more color on that.
And that's the number one concern that we see over and over and over again with our group of investors, is the fear that holds them back. Because it's so hard to predict whether something is a risk or not. And so people choose rather to hold back than to jump in, especially if they're not a risky type like Ross or Eva.
Absolutely.
Yeah. Honestly speaking, I never used to be risky in my investment strategy until I started this group 3 years ago. And I think it's more, I would say, investment confidence than risk taking, because you can take risks, but as long as you do your due diligence, you do your research, and you know that this is going to give you some good returns, obviously not 100%, but maybe you're 95% or 90%, then I think you're going to succeed. So,
and I think a lot of people, they think that they just don't have enough knowledge and experience to take that leap. So having professionals backing them, I think, is a huge, huge deal for so many people, so many investors.
Thank you so much. That kind of confirms the path we took, actually.
Yeah.
Thank you.
I would need that, honestly speaking. Like, from personal experience, I would need that. I wouldn't have the guts to take a risk.
Absolutely. And if you think about it, banks always make money. I'm sure you know that. And that's because they are never focused on taking the risk. They give you a mortgage, they have to absolutely know, every brick in your house is done correctly and all the regulations are followed. They give you a business loan, they must know that your business plan is like watertight and you're always going to make money. They're the attitudes and techniques and skills that we are taught as traders in working for big banks such as Deutsche and Citigroup and Goldman Sachs, because they obviously, as you can see, they've been successful over hundreds of years. They did not do that by taking strange risks on, GameStop or Bitcoin and so on. They're very, very structured. And it's those attitudes which have not been available to the retail public generally is what Ancova is really trying to do. And the reason is because typically high net worth people tend to come in and they ask the question, not what are your returns, but they ask, how is my capital going to help me, my children, and my grandchildren over the next 100 years? Not what are you going to do next year and deliver me a 50% return or something like that.
Yeah.
That is the big difference between what Ancova is doing and what typical funds will do. If you walk into Rack Bank or you're talking to Dubai Bank or something like that, and you ask them, show me your investments, they will just highlight the returns. They will not tell you what happens when the markets go down, because that does not sell.
Yeah.
Whereas if it's your own money, you should be thinking about what's going to happen in my worst case scenario. And that is the objective of Ancova, is to make sure you're protected in your worst case scenario.
Yeah.
May I give an example?
Yes.
Yeah. Okay.
Go ahead.
Last year, the market in September, October, and parts of November fell 10%. This is where Ancova fell about 3%. So this is a real life example. And then in November and December, the market rose 8% and we went up 6%. So we captured less of the downside on the way down. So we protected you. And on the upside, we captured a large percentage of the upside as well. So the net result, -3 + 6, is still +3, whereas everyone else is at -10 + 8. They're still at -2. So over that same period, real life example, that is where Ancova really excels. It's that risk management and making sure people are comfortable and sleep at night nicely.
Yeah.
Fantastic. That example really does make it simple for anyone listening to this podcast, and made it a lot more simple for me to understand, as we've already spoken about me and Eva a few times regarding the hedge fund. And I myself am going to be an investor very soon. I'm super excited about getting involved. And what about those people that say, I want to do it by myself? Can you take us through how these people might fail at doing what you are doing?
Absolutely. It's a little bit arrogant saying that, obviously we have got a lot of PhDs in the finance space and the quantitative space and mathematics and computer science. I would assume that most people do not have that skill. And I would say, absolutely, I do not have all those skills. I have to have a team. We have a team of, quite a lot of people who are spread across that space. So that's the first thing. If a single person has 4 or 5 PhDs and master's degrees in computer science and mathematics and finance, sure, they might be able to do it themselves. But that's one thing.
But then again, you're forgetting the work experience, right? You're forgetting the real life experience.
Yeah.
Because just the degree alone doesn't get you anywhere.
Yeah.
Right? You have to, they have the degree and they can apply their knowledge and their skill set to the real world scenario. But it's not like they're doing it now the first time. They've been working in this space since many, many years and managing large amounts of capital.
Experience is everything. Yeah.
Absolutely.
We always say you have to get involved to really know and to advance.
But to answer the question clearly, absolutely people could do this themselves. It is not challenging. The difficulty comes in is, let me give you an example. Let's say you decide that you have a bet on Microsoft and you have a bet on Tesla. It's going to go up or down, whatever you want to say. And it does exactly what you think it does. It goes up 10% and the other one goes down 10%, and you've positioned yourself perfectly. This is an individual doing that thing. What happens at the end of that period? It's been 6 months. You've made the money exactly as you've decided. What do you do then? You're riding on a high, and now you need to decide what you're going to do with that money now. Do you reinvest in the same stocks? Do you now have to research the other 498 stocks in the S&P 500? Do you have time for that? Do you still have the enthusiasm? Do you have the skills to do that? I would say you probably do have the skills to do that, but you may not have the time, the effort, the incentive, and so on. So that's potentially one answer.
And you may be overconfident after your last success.
This is my downfall when I want to try do it on my own. So I completely understand that. I ride on the high and I'm like, wow, I did amazingly in that stock. Let me put the profits into this stock, and 50% later I'm down.
Yeah.
And then also maybe what happens there is like you're getting emotional about what you're doing, right? So if you have a professional managing it, that's one side of the coin. But remember, we're an AI fund, which eliminates every emotional decision making you may want to throw in there.
Yeah.
Right?
So on that note, let's talk a bit more about this AI fund, because AI is a term that's just thrown around left, right, and center. Almost like we have these robo-cops come in for us, or there's these computers taking over our sleep at night and stuff like that. So break us down. What is an AI fund?
Absolutely. Thank you. AI encompasses a lot of different things, including mathematics, statistics, as well as computer science. It's a general term. Now, how we use AI is to really focus on the mathematical side of things, which is to enable stock selection, portfolio allocation, and then doing statistical analysis on how certain things perform over time. So that is one part of AI. We also use AI to understand things like reports on various funds, such as, news reports and so on. It allows us to extract these specific information from a large article, for example, a newspaper article, which may go on for multiple paragraphs, but we can get the essence of it by using AI, which allows us to make better decisions. So AI absolutely is very, very clever. It has a huge range of implications, but the way that we're using it is basically for its mathematical, statistical, and data extraction properties, and we feed that into our model. And therefore, we're able to make better decisions. We're able to make faster decisions as well, because rather than having to read an article which is perhaps like 1,000 words long, we can ask the AI to read it and summarize it for us, so that we can then have to read only like 100 words, and thus it's a lot faster for humans to then make the decision. So that is the aspect of AI that we're using.
And that is, again, it answers your previous question, right? Could you do that alone at home? Like, even if you were a well-informed investor, would you be able to dissect information on 40 different stocks at the same time in order to build a portfolio. So obviously you could not, because you would be missing the AI and the data science component of what the fund and the strategy is offering.
That's
Yes,
incredible.
absolutely. Because we probably look at maybe 10,000 articles per day. So, I mean, just as a human, even as a professional, let's say you had the skills, you would have to get access to these 10,000 articles, read them all, summarize them all, and make a quantitative decision, not a human decision, a quantitative decision that you could back up mathematically. So, a regulator could look at it and you could review it, let's say, down the line. There's a lot of software engineering, there's a lot of mathematics and statistics going on behind that in order to be able to do that. It's not impossible, but it's challenging. And I would say beyond the capability of myself, definitely, but as a team, it's a different question. We have the time and resources to be able to do that.
But it's also about speed, right? So the human mind is not able to make those calculations and decisions as quickly, obviously, as something that's computerized or.
Absolutely, absolutely. And I do want to come onto that, if Ross, you don't mind.
Please go for it.
If we try to describe the investment strategy, a lot of the things that we do, as Eva alluded to earlier on, is based off well-respected papers. We worked with Markowitz. He won the Nobel Prize in Finance and Economics in the 1960s on his paper on economic and finance theory. And he basically suggested how to create that perfect portfolio. In the 1960s, this is before I was around, my understanding is computers were very, very simple. The mathematical prowess of those, the capabilities of those were significantly simpler. In the intervening 60 years or so, things have moved on, but his theory still stands. It's still well respected out there. Yeah, absolutely. What we have done is taken that and basically brought it into the 21st century, use those 60 years of computing power gains to say, how would it work now with the current stock market, with the current set of stocks out there? What do computers allow us to do? When he was around, you could use his theory to analyze maybe, 10 stocks in a day. We can now do 500 stocks in maybe an hour. It's the difference in computing power. And I think that also differentiates from other funds in that we have the engineering know-how in order to be able to do that because of our software engineering backgrounds, which I think a lot of fund managers do not. They definitely may have the idea, but they may not have the capability to do what they want to do. So yeah, it's another aspect to that. We've collaborated with a number of different professionals in this field, both at Stanford and MIT, and we are continuing to do so in terms of writing white papers with them or continuing research with them. So when we talk about things like not just AI, but also in the financial space, in terms of what techniques are we using, we're not just saying, here's an idea. We're actually collaborating with people in the field who know more than us. Let's be clear here. They're smarter than us. They're much more intelligent than us. They spend even a larger percentage of their lives dedicating themselves to this. Those are the ideas we are now taking from universities and bringing into the real world. And that is perhaps gives us another edge overall compared to other funds out there that your listeners may have understood or listened to and so on.
Interesting.
Unbelievable.
So there's a lot of change going on in the world of investing.
And I wish I had that AI technology at school.
Oh, absolutely.
That could give me that shortcut. But it's absolutely incredible. And I think let's touch base on those Netflix series that we see these days, with all these scams of people that have lost millions and billions of dollars just because they invested in something that looked real. However, the next day that fund disappeared. So let's talk a bit more about that to make sure that the listeners understand that this is a real fund, a real hedge fund, and you guys are not going away anytime soon.
Yeah, very well said, Ross, and happy to provide some color on that as well. So it was really important not only to have like a great strategy, which is significant and very unique in the market, like the only ones who are doing something similar to what we're doing, but in the commodity space is Renaissance Technology. Maybe some of your investors know it's a fund nobody can access anymore nowadays, but they've been around roughly 30 years, a quant fund as well. do something similar strategy-wise in the AI space. Started back then with $1 million and managing now $180 billion,
Wow.
returning 30% year after year after year. So we're the only ones doing this now in the equity space. So not only strategy was key and also the team and the credibility of the team behind it, but for me, coming from the buy side, especially all the regulatory around the investments, the safety of the assets, and the custody point of view was very important. Because remember, I made such a bad experience back then with unregulated investments. BC space is not regulated. Private equity investments, like if you place capital into certain companies, well, it's a gamble at the end of the day. If your capital will sustain there, who is taking care of the custody of funds?
Yeah.
Funny that you're saying now scams you see on Netflix. I don't know if I mentioned this before, but I actually cover a seminar for bankers for Frankfurt School of Finance and Management, where we talk about corporate governance and asset management. Not only do we have all the corporate governance checks and balances in place to be completely compliant with regulatory authority in our jurisdiction, but I actually educate bankers on this topic, and we love working on the Bernie Madoff case, and everyone loves that because it's like, your big story from back in the day, $65 billion scam, like which checks and balances were not in place from a governance perspective, how Madoff actually got away with that. So yeah, I'll give you insight how we are structured, and you can do your research there. Your investor group can do their research to say, okay, they tick all the boxes to say, not only from a strategy point of view, my money is safe, but also from a custody point of view, because that's, again, completely different ballgame. So we are a fully regulated fund, number one, meaning that our profiles have been dissected by the regulatory authority in order to attain a regulation. At the same time, we have independent, well-renowned directors who previously worked 18 years at Deloitte and big audit firms internationally, who are nominee directors who are so-called watchdogs on our fund. So they control our trading strategy as well. So the risk parameters and the portfolios built are within the mandate we're supposed to be investing into, and also the parameters are met and maintained. Then again, we're not just a regulated fund. What actually adds more protection to being a financial institution, which is overseen by the financial authority, is if you bring in another regulated company, which would be a fund administrator. So we are a regulated and administered fund, which means that NAV Consulting Group, it's $180 billion administration group, around since 30 years. They have multiple licenses. They're even SEC licensed, by the way, in the US. So they do all of our investor onboarding, investor offboarding. They maintain the reports to investors. So investors receive like a portal login, like a bank account, where they can see what their investment is doing twice a month.
Wow.
They report to them. So it's not like me, aka I would be Bernie Madoff, saying, oh, you made 10% this month. Lovely. Have a good evening. See you next week, next month again. It's literally a highly renowned firm which does the checks on our trading accounts and then reports to the investor. They manage also all the flow of cash and money within the fund. We don't even touch that money. We actually cannot touch the money in essence until the money's in the brokerage account, which is again a fully regulated SEC brokerage in New York. So then we can place our trades, but they handle all the cash inflow, cash outflow, AML compliance of the AML compliance, KYC checks of the investors themselves. This, from a corporate governance standpoint, that gives investors another tick box because, hey, we're not like a startup company saying, give us your money, we'll manage it, we'll give you XYZ return. We actually say, look, you can invest here. It's fully regulated. You will be exposed to our strategy. We're also listed on Bloomberg. So we're Bloomberg tracked fund as well. In order to be Bloomberg ISIN listed, again, there are a lot of tick boxes which you must fulfill from a regulatory and governance point of view.
Okay.
So yeah, that's something that was really close to our hearts as well, because especially nowadays, there's a lot of fraud going on, especially like if you look at the crypto space, a lot of really bad things happened there. And us ourselves having our own money in the vehicle and having friends and family who invested it first case, like grandmothers, aunts, and so on. It's really important that people have that comfort not only in the strategy, but they know, okay, they really tick all the boxes there.
Yeah, and I think that it's one of the reservations people have with the introduction of AI in this space is that people have trust issues with that kind of thing, because it takes a certain mind to be able to develop a tool that can help you with your investing, right? But then you have to have the other aspects on board too. And I think that there's a lot of things going around where they're offering just that one little space where maybe it's smart, maybe it's a smart technology that helps you, but it's not a regulated company where your funds are safe, you know. And it might sound amazing, it might sound incredible, and the minds behind it might be amazing, but they don't have that other side to it.
Absolutely.
So I think that's how people are getting scammed in this space at the moment.
Absolutely.
So that's good to know.
And also, if your investors go like to so-called, they call themselves investment firms, but they're not regulated from any authority in the world. If someone's like guaranteeing you high returns, like giving you checks in advance where you can collect your return in 1 to 2 years, I think you should just really get up and leave that meeting, because that does not exist in the regulated space. Such promises cannot be made unless you're investing into a fixed income product. That's very, very different, right? But yeah, for us, key is, because we've been on the buy side, I've been on the buy side, that you have a fair product, a good product, but also that all the terms and conditions around that product are very fair and very transparent. We're not a bank. We're not trying to make fees on redemptions and on sales charges, because we personally just think it's a very unfair business.
Yeah.
Right. So, yeah, I think one thing, what I also would like to say is, coming back to the investment strategy, which Ronnie can happily dive into a bit deeper, is what we actually invest into. Saying we invest into the SP 500 is very basic, and it doesn't actually cover what we do from an investment mandate point of view. So yes, we are long short equities on the top 100 stocks, but we are also investing into options, which kind of work like a insurance on your portfolio, because it hedges you for the downside. But I think, Ronnie, it would be really great if you could provide some color on there, because that was back then what actually got my attention, because nobody in the quant space actually works with options. That's what Renaissance Technology does in commodities, but in the quant equity space, not heard, not seen of, because it's a very difficult
I can imagine this is also something that people can't just walk off them from the streets and just do, you know, to have that insurance put in place in terms of what you do in this area. So it would be great to hear more about this, definitely.
Absolutely, thank you. So let me explain our actual portfolio construction strategy. This is going to be a little bit more detailed, but I hope your listeners appreciate it and then kind of understand. So imagine if you had the S&P 500, you have access to all the 500 stocks and you have no idea where to start. You know, you are literally our Ross sitting there going, oh my God, there's 500 stocks in front of me. Which one should I invest in? And your mandate is to make sure you preserve everyone's capital. That's your mandate. You must make sure that happens. How would you choose something like that? That's an interesting question to ask and answer in the first place. And the way you do that is by looking at the historical performance of all the stocks in the S&P 500 and finding the one that has the least volatility. And the volatility meaning how much it goes up and down, up and down, up and down, and so on a historic basis. Because it turns out that does not change that much. You know, stocks may go up overall, stocks may go down overall, but the daily up and downs, they tend to stay around about the same amount. And you can measure that. So if you choose that, that's your first stock that you've chosen. Let's say, for example, that's Microsoft. Now the question really then becomes, you know, what's the next stock that you should add? And now you've got 499 stocks to choose from. And the way you would do that is say, well, if I add this other stock, does that improve my risk, as in reduces it, or does it make it worse? And therefore, you can go through all 499 remaining stocks and see which one improves your downside risk, i.e. the risk of losing money. If it reduces that risk of losing money, then you add it to your portfolio. You keep doing this. And at some point, you realize that around between the 30 and 40 stock mark, that you've minimized the risk of your portfolio no matter what. You could add like another 100 stocks and it wouldn't make a huge difference to your thing. So that's step one in choosing which stocks go into our portfolio. Very mathematical, very objective. And just to do that alone is basically based off the Nobel Prize winning theory that we just spoke about earlier on, Markowitz's theory. It's about best stock selection. But now you have a portfolio that will be substantially safer, just objectively alone. You could actually literally measure that risk. In addition to that, what we do, and this is where we have collaborated with people at MIT and Stanford, is add options. And what do options do? They protect you when markets go down even more. And again, you have to choose the right one. To choose that right one, it's the same process. Imagine you had all 500 stocks and you had every option. There's roughly 1,000 options for each stock. So now your space that you're searching is like 500 times 1,000. It's 500,000 different options. You again do the same process. Which option will basically reduce your risk even further? You find the right one, you add it to the portfolio. If it doesn't reduce your risk, don't add it. You keep doing this. And at some point, you also realize about 10, 15 options later that that's the minimum risk you could potentially have. So your mandate is fulfilled by doing this process. And now you have a very, very safe portfolio comprised of the safest stocks in the S&P 500 and potentially the best protection for your downside as well. You combine all of that together and you end up with the Ancova fund. There's a little bit more to it than that.
Yeah.
But in essence, that's what we're doing.
But wow, just listening to this is like, it's honestly making me exhausted. So honestly, you guys spend day after day doing this, for this fund. And
for the last 7 years.
For the last 7
Research,
years.
development.
Oh, it was making me want to scream. Like, my head was spinning.
I can just imagine me doing one and then like losing track and going back, and oh my gosh, it's way too much for, I think, the normal brain to put together. So definitely we can see the excitement behind it when you talk about it. And that just shows you that you have a team behind you that actually enjoys this. And
way too much.
Way too much, yeah.
You can call Ronnie 6 a.m. I'm coding. I'm like, okay. Now I'm like, Ronnie, but we're like, our strategy is like completed. Like, it never finishes. I'm like,
yeah,
okay.
true.
It evolves by the day.
Yeah.
And that's amazing. And on that subject, how do you adapt to the market change? Because it changes so often. Let's say that you are checking your risk factors for all of these stocks, and then all of a sudden the market goes into turmoil. What do you do?
Yeah. So following on from my last answer, we can sit back and relax. And that's the key thing, because the key point should be that if you've structured your portfolio in such a way that is objectively, has reduced your downside risk and the market goes into turmoil, we actually do nothing. We actually sit back and watch the market fall, and we sit back and watch our portfolio not fall and go, look at that. That's exactly what we designed our portfolio to do.
That must be a good feeling.
That is an excellent feeling.
Yeah.
And sometimes it even rises. And I'll give you an example. In September 2022, when the market fell 10% in just a month, we went up 1.5%, 1.7, I think it was actually. So on those months, we were just going, yeah, we'll take a break and we'll just watch it and let everyone else panic when they were exiting their funds.
Unbelievable. You get a mojito, you sip it, and you just watch everyone else crumble around you while you guys are doing your thing, so which is incredible.
I just want to add one thing, just because I think your investors will be interested. You mentioned that a lot of your investors invest in ETFs. And what's the difference between ETF and Ancova? And I really want to highlight that because it's quite important. An ETF has a single mandate that's created at inception. So, for example, the Vanguard S&P ETF was created, I don't know, 1990s or something like that. And their mandate was, please invest in all 500 stocks in the S&P 500. That's it. Now, they can do that very, very easily. They just replicate it and they just say, here you are, and anyone could buy that ETF. Not a problem. But what's crucial is they are not allowed to change that mandate. They're not allowed to adapt.
Yes.
If some fund,
they're regulated, right?
They're regulated, right? Just like we are. And if something changes, like, I don't know, let's say Apple collapses tomorrow, right? They can't do anything. They just have to take that hit and just say, okay, Apple collapsed, the S&P has changed, life goes on. You guys take the hit. So when you buy an ETF, you are tied into whatever their mandate was on day one, because they have to submit that to the regulatory authorities and say, we will follow this throughout.
In order for them to change this, can they change
They can't. No, they have to release they have to create a new ETF which they release all the time. Yearly there are new ETFs coming out all the time. But it's up to you as the buyer to find the ETF that matches your strategy. Again, more research needed by you as the individual or the bank. What we can do, though, is basically say, well, we understand that Apple is going to disappear off the S&P 500 next week, tomorrow, whatever, we can follow that and we can get out of it. And that is the difference between a fund and an ETF. The mandate allows us to do that change, again, within our overall mandate of minimizing risk. So we couldn't choose Apple and replace it with a penny stock. We would have to still follow our mandate, which is make sure whatever stock you add has to minimize risk. Unfortunately, ETFs aren't strictly allowed to do that because they don't have that level of flexibility.
Yeah, so this is an active managed portfolio, right? So these ETFs, those are passive portfolios. Again, the mandate is set from the beginning and there's no further research which goes into that. They just create another ETF if things do not go as expected. If you have an actively managed fund, as in our case, it's very different. Research never stops. Research never finishes. And we're able to be dynamic and adjust to the volatility of the market and the dynamics of the market.
Yeah. So what I'm hearing is as the investor with the ETF, you have more work to do. And your way as an investor, it's much more passive. You have more time as the investor, and it's not as much up to you to do the research and to make the adjustments and to be adaptable and all of that. So this option is way better for someone who is not like enjoying the game, wanting to be active, wanting to do the research, and has all that time, and is maybe a retired, I don't know, finance person.
Absolutely. Yeah, exactly. And you're right. It is a lot of work and effort and so on. And I think just like every job, you can either give something to a professional to do, or you can try to do it yourself. You'll definitely save money doing it yourself. But whether you have the time and inclination and capability, like I'm pretty sure I can do plumbing myself in my bathroom, but I'm probably not going to because it's just easier to just call someone and just and get it done a lot better and more professionally and not have a leak the next time I take a shower.
And you don't want to do it every month, right?
Exactly.
That's a good one.
You said that the fund has been trading for the last 7 years. Take us through the returns. Maybe this is putting you on the spot, but this is very important, I think, for the listeners to understand.
Absolutely. Also, just to highlight there, so we've been researching and developing since 7 years, but as a fund, we're live since September 2022 because you had to get to that certain comfort level. We've been trading our own funds so far, get to this certain comfort level to say, okay, this product is actually ready for the market. But what we did different than other funds is we didn't take third-party capital and say, okay, we're just going to give it a gamble with your money. We used our own savings to do that. And that's how we have that 7-year track record. However, as a fund itself, regulated, Bloomberg tracked, we're active since September 22, where we can say, okay, here's the finished product of all this research and development work. And yeah, happy to give you some insight on the returns as well. Ronnie, maybe you give it a go?
I want to reemphasize what Eva has mentioned. The fund is always under active development. So what we had as a strategy in 2017 when we started is not necessarily what we have now. But saying that, if you look at our performance, we've been delivering around 23% on average over the last 7 years. Not every year. Some years we do worse, some years we do better, but the average overall. And that's obviously a very tempting proposition to most investors. But again, I would like to focus on the risk side of things and say, what happened when COVID happened? What happened when 2022 and 2023, both years, there was 10% corrections? It's those areas that I would say a true investor should be looking at, rather than just the wonderful 23% returns, which is obviously also very good. I mean, no one's going to complain.
Yeah.
But
that's amazing. That's absolutely amazing. I mean, when we were speaking about it before, me and Eva, when I heard 20% plus on over 7 years, for me, it's unbelievable. For me, it's something that you don't see in the market today. And 100%, we need to get it out there that it's not 20% every year. It goes up and down.
Yes.
But to have an average of 7 years is amazing. And that's what we're looking for. We're looking for consistency when we take out a long-term investment. This is something that you're going to get into for life,
Yeah.
Absolutely. And look at the down specifically. So when 2022, the market fell -20 and we delivered +11. we are not delivering plus 20 in that year, but the whole market has collapsed at minus 20 and people have lost, on 100 grand, 20 grand of their money, whereas we're still up plus 10. So, or plus 11, let's say. And that's really the focus, is that risk management. So again, the absolute returns is not really the focus, even though it's nice to have those numbers.
Yeah. That's what I'm looking at as the wife who's approving, where he's putting these large chunks of money.
He used to have control over the finances, not anymore.
So I like to hear that we're not going to be losing this money that I'm trusting him to manage so well.
On to a question that might put you guys on the spot again. And this could be a very juicy question. I'm sure everyone will be on the edge of their seat. You guys are talking so highly about your fund. However, what percentage do you have of your capital wrapped up in this fund?
Every single penny in my case. Ronnie, you?
As well, not only my liquid cash, also my pension as well is within this fund as well. And the reason is we trust the risk management of the strategy. I know that, okay, it's still another 20, 30 years away, but I know that, I won't lose money. And that's the key difference. Whereas, one of the philosophies, actually, this is an interesting story. One of the reasons we started this fund was because of our pension. We saw that when we put money into our pensions, in the UK at least, the pension managers were buying Ferraris and buying lovely houses and so on. And when we looked at our values, we were looking at why are we only receiving, 5% or 6% a year or something like that. And when the markets went down, they were like, oh, sorry, it's the markets. And we were like really, really annoyed and very frustrated at that thing, because they took no responsibility when the markets went down. And when the markets went up, they just took the profits and ran away with them. And we were thinking that this was really, really unfair. So, and that was probably one of the driving reasons for creating Ancova, that unfairness in the financial space. And therefore, the way we work is that we are aligned with your interest. We get remunerated because we deliver for you, not because we just make fees for the hell of it. We only do it when we actually make money for you. That's our primary compensation. And it means our interests are always aligned. And it also means that I can trustworthily put all my money in and know that, my money is safe in my own strategy.
Yeah, so it's an ethical mission too.
That was actually one of the driving forces for UAE Grow Your Finances as a group. I had 2 financial advisors in my life. Hope they're not listening. One was back home in South Africa, which I had to take out the money because we were moving to the UAE, and I got killed with penalties, and at the end of the day lost money. I wasn't going to make any return anyway, because I think I was at break even after 3 or 4 years.
Wow.
This was when I knew nothing about finances.
Then when I started that like in your teens.
Correct. And then imagine a teenager, wants to make a living for himself, and then you have a financial advisor that are making a killing of people suffering, people not making anything. Came to the UAE, I thought it would be different, looked up another financial advisor. I'm not going to call them out.
No naming and shaming.
Absolutely not.
Shame.
He was a nice guy. He really was a nice guy, but he did nothing for me. Maybe at the end of the day, I took my money out and I made 1 or 2% after a couple of years. So this was one of the driving forces for creating this group, because it's just not fair. And these people, it's not really these people. These companies are destroying the market. And these companies are the reason why you guys probably have to fight so hard to tell people why your fund is something for them to get into, because they have so much trauma from just jumping into every fund here and there. So
absolutely,
it's definitely a good thing to talk about. Absolutely.
Yeah.
It's those personal journeys, right? It's those personal journeys that we've been on, and everyone can share that experience. Everyone has their funds that they've not made money on, but their fund manager has, for some reason, made huge amounts of money at the same time at their expense. And you wonder why.
Yeah,
exactly. They show up in these fancy suits. You think, wow, these guys are going to make me money because they look like money. But at the end of the day, they're making themselves money. But it's not everyone. It's not everyone.
That's about it.
Yeah, exactly. It's not everyone. We do need to call out some of those good financial advisors out there that are making great money for their clients, which is only the people that we work with. We only work with people that are in it for not only themselves, but the clients as well.
Yeah, we're all about giving and receiving. And when we find alternative options that actually do genuinely help people, we want to sing it from the rooftops, and we want everybody to know about it and benefit from it together.
Absolutely.
So nice.
So let's talk about also something that really attracted me to this fund is the monthly profit payouts, as well as the fact that if I want to take all of my money out, or I need 50% of the money for a, like, let's say a mortgage payment or a house payment, I can do that without any exit penalties. So let's talk a bit more about that. Why did you guys do this? Because I think you probably are the only fund that does this.
Yes, that's actually a very good question there, Ross. First of all, it's confidence in our strategy, because if you deliver great results, we're quite convinced that a client will stay with you long term. On the other side, we don't have any financial motivation to charge investors unfair fees, because again, for us, a good client is a client which stays with us a long time, where we can grow the capital and we can increase the gains month after month after month, and the capital is compounding. However, personally, we're invested as well, right? So we ourselves have to be able to access capital at, it was very important for me coming from the family office space that whatever product we're investing into from the family office point of view, we can take out the capital whenever it is needed, and that we're not penalized when doing so, because that for me is the worst thing ever. It doesn't take that much to click a button and release capital back to investors. Again, we invested into the liquid space. So we're not invested into illiquid assets. So obviously, if you have a portfolio of stocks, it's a few clicks of a button, you can liquidate the portfolio. However, we have 30 days notice period when an investor has to notify us to get out their capital. And yes, happy to release that capital and off you go.
I mean, that is extremely fair, because at the end of the day, it does take a bit of toll on a company, I guess, where money's coming in and out so quickly. How long does the investor need to be in the fund before they say, listen, I need the money, can I take it out?
There is no minimum subscription period. Obviously, we're happy the longer you stay, because it's also less noise in the fund, in and out money movement. However, there is no limitation. You can say, I'll test it for 3 months. You can say, I'll test it for 6 months, 1 year, 10 years, totally up to the investor and how he wants to work his capital. The idea is always that the fund is like the pendant to your bank account, right? You have maybe dead money laying around, which is not really giving you any return and not doing anything. Why not put it in our fund where you can access it any time with 30-day notice, and the money is actually giving you a return as well.
Amazing.
One last thing I wanted to add also to the podcast is not only do we have Ancova Capital, stands for more than just Ancova Volatility Optimizer Fund, because the unfairness within the finance space, it even starts from structuring of a product. I don't know, within your UAE Grow Your Finance group, I'm sure you have some individuals which maybe are good traders and which have managed accounts and where they're looking after third-party capital as well in an unregulated structure under a brokerage custodian vehicle. But what we also do is we incorporate for emerging managers, if we think their strategy is great, we incorporate funds under our umbrella where we have the regulatory oversight there. So again, this is trying to revolutionize the system, because when we structured our fund back then, believe it or not, it took almost 16 months to get all the legals in place and find the right legal partner to work with, the right administrator. And it's a very expensive exercise as well, because everyone knows who actually makes more than the finance person. It's the lawyers, right?
Yeah.
Yeah, and the good lawyers as well, right? So they have quite high hourly rates, and in order to get your own hedge fund structured, it's very lengthy and a very cost-intensive exercise. So again, not only do we lecture on corporate governance with elite universities, but we actually have your www.getyourhedgefund.com for emerging fund managers which also want to have their own structure.
That's amazing. So you basically give these unsung heroes that are managing other people's funds on a smaller basis, you give them that opportunity to scale the business.
Absolutely. One of our funds, they've been managing $7 million since I think 2021. And now they're on the platform, they're managing 30 million just because they have a regulatory behind them. And for investors, they understand this ticks all boxes that the custody of my funds are safe. But it is a game changer for many people in that space.
Amazing.
So what does the future of this space look like for you? It sounds like the space has really evolved in the past, let's say 20 years.
Absolutely.
So where do you see it going in the future, and how do you plan on staying ahead of competition?
Everything. Ancova is already ahead of the competition. The way we look at the funds space is probably different from most other companies. And the reason for that is because we are a small team. I've worked at Deutsche, Citigroup, Goldman Sachs, etc. They are huge companies. They have billions of dollars in revenue. They can spend however much. You can throw any problem at them, they can spend the money to figure it out. But the challenge that they have is that because they're so huge, getting team A to talk to team B is hard because they're just, there's 100 people in team A, there's 100 people in team B. That one person who has that cool idea can never really get it out there that easily.
Yeah.
And I think that's really the difference with Ancova is that we are a small team of quants, 4 or 5 of us. We're a small team overall, like 12 of us as a group. And every idea is open for discussion. And I think it's actually the human nature of the company, the personalities behind the company that make us innovative. All this technology and AI and stuff sounds wonderful and wow and so on. But, let's be honest here. There are companies out there who can spend billions more on this sort of problem than we can.
Yeah.
But where we gain is the human aspect of it. The fact that I can speak to Eva can speak to my whole team. I can literally go down and have lunch with someone and say, look, what's your next big idea? Can we incorporate it into the fund? And we're able to experiment and try things out. And if it works, we put it in. If it doesn't work, we keep it. Maybe it will work some other time. We'll keep it on file somewhere. And it's that human nature of the whole business that I think is what makes us innovative. And we will continue to do that. There is always new research. Like Eva said, we are coding at 6 a.m. and maybe also at 9 p.m. We definitely work a 5 to 9 job rather than a 9 to 5 job, let's say. So that's how we plan to stay ahead. And let's see how this kind of grows.
Great. So you have a safe space for creative expression and to actually test out your ideas. That is just such a dream for someone like you, both of you.
Absolutely.
Yeah.
Absolutely.
And I think that's where the magic usually happens.
Just before we end off, Eva, can you tell us a little more about Ancova Capital Management as a company? What services do you offer? Because they are not only the fund, the company is bigger than the fund.
Yes, absolutely. Good question. Thank you for that, Ross. So Ancova Capital Management, regulated investment management company, is your umbrella corporation. Within that, we also do boutique advisory, right? So for high net worth, ultra high net worth, and celebrities, which kind of keeps the light on until we have like 1 billion under management. So we do a lot of structuring work, tax advisory, offshore structuring, Dubai company formations, golden visas, you name it, with our known circle. That's how it all started, and all went by word of mouth recommendations because people were happy with our services. In the structuring space, we structure funds as well at a very cost efficient and time efficient setup. We do luxury real estate as well. We have Ancova luxury properties because, again, existing clients, if you gain the client's trust since working with them for 5 or 6 years, maybe you started by structuring a company for them in UAE and setting up their bank account, and they know you, they trust you for 5 or 6 years, and they say, well, I actually want to move now to Dubai. Can you help me find a nice place for me and my family, a nice home? So you see, all what we kind of do comes out of frustration with like bad service providers or bad product providers, right? And what we used to do, not to like name and shame anyone, is we would give, just in the real estate space, we would give our leads to an agent. We didn't even take like any commission introductory fee for that. And they would take care of the client. But the problem is the moment you give the client out of your hands, you've lost control over the client, which I don't have a problem with. But I do have a problem if a client knows me since 5 or 6 years and then they've been overcharged on units because you know how the market is here in Dubai, but that falls back negatively on me. So I would suffer reputational damage just because how other people are running their business. So I said, okay, we need luxury properties as well. So, everything comes out of a personal experience, a personal impression of being treated unfair, and honesty and integrity. That is like the main thing behind anything what we do. Even if you look into the company formation service offering, we are an elite service provider, 5-star Google review. However, we're not priced as such. So we're in the mid-market from a pricing. We could ask more, we could do it for less. But, it's always important to have a fair approach because the whole business game as an entrepreneur, it's a marathon. It's not a sprint. And we think people, especially out here, they're always out for the quick buck, but that's not what we want to do. We actually want to create a legacy for us as a team where we can sit back one day and say, look what we've actually built. And that's only doable if you have integrity and honesty and transparency in your offering. And if the moral and ethical conduct is across the whole team.
So the way I see it, you're also helping to stabilize the Dubai economy, essentially, for the long term. So it's contributing on a
Hopefully.
larger scale. Yeah, it is certainly contributing towards that. And it's like having a friend who's thriving in Dubai and making it work. And you just reach out to that friend and they're like, I got you. Whatever you need, I got you. I know where to put you on. You'll be happy. You'll be sorted. You'll be not taken advantage of. You'll be safe. It's fantastic. I love that.
And with Dubai being now one of the best places in the world for entrepreneurs to come and settle, I think you offer all the perfect services. They come in, they get a business license through you, they buy a house through you, and then they go and invest their money through you. So it's a perfect three that any entrepreneur or anyone really would dream about doing, you know?
Yeah,
So
so I think all of the world's richest are going to countries like New Zealand, Australia, but Habibis, come to Dubai. This is the place to be now. This is the place to be now for this kind of thing. Yeah.
Absolutely. Absolutely. Especially in terms of safety, the safety of the country, the beauty of the country, right? Like we're all sitting here smiling with a tan. Let's be fair, right? Yeah, it's a nice place to be.
I need somewhere warmer.
come over.
Come in.
So guys, just to end it off, if you would like to get in touch with Ronnie and Eva, we can do so. We can put you in touch with them. Just let us know. Drop us a message on Instagram, drop us a message from the group. Get in touch with us any way you possibly can, and we'll put you in touch with both of them to have a fantastic chat to go into details. And with all of your juicy questions, they love hard questions, as you can hear on the podcast today. They will take extra care of you if you mention to them that you are coming from UAE Grow Your Finances as a group. And we will also tag your Instagram page and their website down below so that you have more information going into the conversation.
Yeah. So where can they find you if they want to contact you directly?
Yes, so we have a website, www.ancovacapital.com. From there, you can be revised to our other business units, boutique advisory, asset management, real estate. So there's like a link tree.
Okay.
Of course, best is always to go through Ross. That's maybe the most easiest for your community as well. And again, we make extra effort when someone's from Grow Your Finances because we know that's like the revolutionary group of people who are like, try to do better than the masses.
Yeah.
So,
Thank you.
Thank you so much. Yes, so please get in touch with us. Let us know you want to speak to these two beautiful people, and they will definitely make your dreams come true. I know that they are going to be making our dreams come true because we will definitely be taking a nice big ticket out on the hedge fund very soon as we have saved up enough capital after buying our house.
Yeah, and we're very excited about it. We're very excited to see what the future holds for this company and how we can get involved. Mostly, we're very excited for that.
So once again, thank you so much, Ronnie and Eva. Would you like to share one last thought before we go?
From my side, not. It's been an absolute bliss speaking to you and Kim. Ross, it's been amazing meeting you as well. Yeah, it's been an honor to be on your podcast. Our very first, but we're glad we had our first one with you guys.
Oh, likewise.
Thank you so much.
We're glad to have you. Ronnie?
Thank you so much for asking about that. We have a team of around 5 people here. And the great story is I actually met them back in 2003, so over 20 years ago.
Wow.
And I'd worked with them at a couple of investment banks and hedge funds with them for a few years and slowly got to know them. And for some reason, I just knew that they were the right people to bring onto a business like 20 years down the line.
Mm-hmm.
It's just that feeling that you get when you meet someone and you go, yeah, that's the one.
Yeah.
And
sure,
it's really
absolutely.
unusual. Absolutely. And it was so unusual that it's like 4 of us that we've been together for such a long time, obviously working in different places. But then eventually, we all came together at this juncture to create this hedge fund. And I specifically want to mention Andrew and Anthony, whom I would not have been able to get to this stage, and we would not have been anywhere close to here. Their dedication, their support, and their attention to detail has been instrumental in making this actually work. So that's been my biggest benefit. So it's not just about me, it's about the whole Ancova team, is really what I want to emphasize.
Yeah.
Thank you so much for inviting me and allowing me to speak on this. And it's been a pleasure meeting you guys as well. And like, I hope to meet you guys in person when I'm in Dubai and count you as friends, hopefully, as the time goes on.
Inshallah. Thank you so much for sharing your intelligence and time and opening our minds. Thank you.
Thank you. Another mind-blowing episode. What do you think, Kimmy?
I thoroughly enjoyed this episode, and I thoroughly enjoyed the energy they were giving. I feel like they have an incredible team and they're doing amazing things in this space. I am very excited to see what the future holds for this company.
So get in touch with us if you're interested, and do not forget to pay yourself first, because you are worth it.